Hello everyone, how are you? This is Kate. Great to see you again, and welcome back to my another live stream on my YouTube channel. Today is the 3rd of July, and this is on Thursday. So let me check the markets together and see what's happening today. Okay, so let me switch the screen to trading view. First, let me do recap on pound JPY, as I have been covering pound JPY for the last few days in my YouTube. So and now today looks like there is bounce on the trend line. So let me explain what's happening right now and what may happen in the future. So here let me do this. Go to the trading view. Okay. And so here is a pound JPY. So first, let me cover the weekly time frame. It's always the best to cover the higher time frame first. So here is the pound JPY. The market broke the resistance level last week. On the week of the 23rd of June, it broke bullish. The resistance level was 196.78. and it's up, and now so far this week it has been forming the doji candlestick. Doji is let me zoom in the market. Doji is actually this single candlestick over here where open and close prices are the same level. So now open price, close price are very close so far. So that's why body of the candlestick is very small, and this is doji candlestick. And when we have doji, that means this week so far it's been ranging. The market went up and down and up, or it went down and up and down, and now we are at here. And so the price from the Ichimoku perspective, it's bullish. Technically speaking, because the price is above Tenkan-sen, Kijun-sen, and Kumo, and Chikou span above candles, but the bullish momentum is not that strong. I think I mentioned this one as well. This last Sunday when I was doing the weekly forecast, because the Kumo itself has been flat at the moment, and Chikou span touching. So in this case, usually the market doesn't break the resistance. And in fact, the market was resisted by the previous resistance level, which was 198.83 last week, and it's retraced today. So that's the weekly overall analysis. So buyers are still winning over sellers. So momentum-wise, it's bullish, but the trend strength is not that strong. So with that in mind, if you check the daily time frame, so daily time frame has been nicely supported by the Kijun-sen as well as the trend line, like this. So in today, it bounced. It bounced on the Kijun-sen on the daily time frame, which was exactly on 195.76, and now it's up. So last week the market was resisted by 198.83, and this week so far it's heading towards that resistance level again. So there's a higher chance that the price reaches that resistance, so I'm still biased. I'm still looking for buying opportunities. So a few days ago, exactly on the day 23rd of June, the market broke the resistance level of 196.78 area. It broke the resistance and then retraced back to Kijun-sen, and this is called Kijun-sen retracement situation, and now it's bouncing. So after the market breaks 198.83, then most likely it's gonna reach 200. In this area is the resistance zone I would say between 199 and 200, about 100 pips in range is like the resistance zone. There are some sellers waiting to sell the market in this area. So it may be a bit risky to trade. So here is how I usually trade. So before the market reaches the resistance, I enter the market, and before it reaches the resistance, I set what I call break-even line. So break-even line is, let's see, let me explain that one, because this is very important in terms of the risk management. So to do that, I go to the 5-minute time frame, and so the market is now up like this way, and this is the target. So for this is target, and this is where the price is right now, and we have let me see how many pips we have. We have about 106 pips or so, the room to trade. So let's say you enter the market now, and as the market goes up this way, your direction, so you have the stop losses. Let's say in this case, I think the reasonable stop loss will be here, or even before the previous resistance. Maybe that's better this way. So let's say you enter the market by now, and you put the stop loss here below the previous resistance, and so the market goes up your direction, and you actively move the stop losses. And what I mean by break-even line is I move the stop loss above my buy position, which is over here. So I manually drag, or I manually input the number of the price on my mobile app to move the stop loss above my break even, above my positions, so that it becomes break even. And if the market reaches here and retrace, then I would exit and take profit at some point. But if it goes my way continuously, then I don't, of course, exit. I just keep holding and holding until the market reaches the next target, next resistance level, which is 200.00. So this is how I set up my trade, and that's really important in risk management. Usually what people do is that in this case, this trade is almost like a risk-reward ratio would be 1-to-1. If you set this as a TP and you put the stop loss over here, it's 1-to-1 risk-reward. So the chances are, let's say the market goes up this way and retrace all the way and hit the stop loss, then this is usually when you exit the trade, right? But and this is what I used to do also. Once I set the stop loss, I never move. But now with my strategy, I actively move the stop losses towards the major direction, my direction. And so along the way up, I can also move the stop losses higher and higher until I set the break-even line, so that I risk less and less as the price goes towards my direction. So let's say I risk 2%. I usually risk 2% to stop loss. So here I risk 2% of what I have in my trading account. So let's say if you have $10,000, then you are risking $200. So that means if the market retraces and hit the stop loss, then you lose $200 out of $10,000. So that's 2% risk per trade. So the worst case scenario is 2% drawdown, which is still small, but smaller is better in terms of drawdown, so that it becomes easier to cover once you start to make profits. So that's why, let's say along the way up, if you move the stop loss to halfway to your position, let's say here, which is 1% drawdown, then this is already 1% drawdown, right? So initially you took almost 1-to-1 risk reward, but by moving the stop loss manually to your direction, then this trade is going to become, sorry, today is very dusty. I was outside all day. Sorry, today was very dusty, so I almost sneezed. But sorry, let me continue. So yeah, so if you move the stop loss here in risk 1%, then this trade is becoming now almost 1-to-2 risk reward ratio, right? And once you move the stop loss to, again, halfway or almost here, let's say, then this trade is going to be 1-to-4 or something risk reward ratio now. And eventually, if you move the stop loss above your position, then this is becoming non-losing trade, which everybody wants to trade. Everybody wants to trade, whether it's break-even or win game, right? You never want to trade break-even or you never want to trade either win or lose, 50-50 chance. You don't want to take 50-50 chance. That's why usually it's said that the risk reward ratio is important. But and by actively moving the stop loss manually towards your direction once the market goes your way until break even, then technically you're risking less and less on this particular trade. And if even if the market retraces down this way, your drawdown is kept small. And this is very important in terms of the risk management, and this is part of my strategy, KTS. So now the price is a bit coming down, so we're gonna have to wait until the price bounces on this support level and up. Then at some point you can enter the market, right? You can enter the market and see if the market goes your way this way. So always when you enter the market, you better put the stop loss, or you must put the stop loss. I used to not to put the stop loss when I was still a beginner trader, and I had such a huge drawdown. I remember that was one of my trades on gold, and I was going to monitor, or I was very confident that the market goes towards my direction. So I thought I don't need any stop losses. And that was a huge mistake. After that, the market went down and down and down, but I didn't want to exit because I thought the market comes up, sometime in the future. But in fact, the market just kept going down and down and down, and I exit almost. I blew account with that kind of trade. And that's really risky. That's really risky. You need really the proper risk management to be able to limit the drawdowns per trade and control the risk per trade. Even if there's no fundamental news in the future or within today even, sometimes without any reasons the markets can go towards any directions, or they may shoot up and down, right? I'm sure you have seen these examples before. You see this huge bullish bearish momentum and you check the news, but there's nothing, and it happens. So we cannot control the market, and we cannot see the future market. So that's why the risk management is important, and not only that, the stop loss management skill is very important. So yeah, again, if you enter the market here, then you can most likely put the stop loss. If you put the stop loss below here, then it's almost like, I think, 100 or maybe more than 100 pips, which is quite big. Yeah, it's like 124 pips, which is quite huge. So I would put the stop loss above the previous resistance over here, which I take 92 pips of stop loss, or I take this doji. There was actually inside bar inside outside bar breakout over here. So that means this resistance level over here is also strong. Sorry. This resistance level over here is also strong. So sometimes when there's no retracements or pushbacks, then I put the stop losses based on the candlestick patterns. So in this case, I can also put the stop loss below here. And in this case, by doing this, my stop loss is 47 pips, which is okay for JPY pairs. Because JPY pairs are more volatile than other markets. So yeah, JPY pairs, when I trade, the stop losses tends to be a bit bigger pips than other pairs. So reasonably, let's say I put the stop loss over here. Let me just draw it like this way. If I enter the market now, I see the bounce on the support level. Let's say I enter the market. Technically speaking, I use the Bollinger Bands and Stochastic and Fibonacci and Tokyo Box breakout and some other strategies combined together to exact spot to enter the market. But for now, let me just simplify the explanation. So now, let's say I enter the market because I see the market has been supported by this line, this level over here. And so if I just enter the market right now, then I put the stop loss here, 197.1, and so this is target. 198.83 is the target. So this is entry buy, this is my stop loss, and this is the target. Well, actually, I don't set TP. TP is like, for me, it's like most likely the market goes towards here or this level. But just because it reaches here, I don't exit. Because one of the examples is that, let's say the Kumo shape, Kumo thickness, the area between Senko span A and B is thick in higher time frames, then it tends to penetrate, it tends to break the resistance and keeps going. So in that case, I don't exit. I just keep following the market as long as it goes, so that the body part of the fish becomes bigger and bigger, and eventually wherever the market retraces and comes back, then I simply exit and take profit there, so that this part becomes the tail of the fish. This is the head of the fish. This part is a head, this part is a tail, and this is a body part I'm taking. So yeah, so that's usually how I plan the trade. But if the target or if the resistance is too close, then I wouldn't enter the market. But since we have more than 100 pips of room to trade, along the way up, I move this stop loss to, let's say, first maybe here to below the support level on the 5-minute time frame. So initially, let's say I risk 2% to the stop loss. I risk 2% to the stop loss. Then by moving the stop loss higher to here, then this is above halfway. So in this case, even if the market retraces and hit the stop loss, in my drawdown is going to be about 0.8 or something, which is very small, very small. So if I have $10,000, then this is going to be only $80, or 2% would be only $200 anyways. But it's the drawdown is going to be kept very small, and this is very important. And eventually, let's say the market goes up and up, or let's say the market retraces and bounces on the previous resistance and goes up, for example, then I eventually move the stop loss to here above the positions, and this is my break-even line. So I have exact timing for the break-even, but I'm just explaining this my risk management strategy here today, because I thought it's important to talk about. So as soon as I set the break-even line, then even if the market crash and goes down for any reasons, anytime it can happen, but I don't lose. The worst case scenario becomes break-even. So this is the goal of my trade. Every time I enter trade, my goal is to set break-even, because after that, it's gonna be either break-even or win game. If the market goes and goes and goes, then I just simply take profit. But even if the market retraces, I don't lose anything. So my goal of my whole strategy is to play the game either break-even or win game. And that's why if you check my monthly performance, my drawdowns are very small. But when it comes to capturing the profits and pips, they are bigger than my losses. And if you can design the strategy like this way, then the more you trade, the more you win, the more you make profits. And yeah, so one of my aha moments, or one of my biggest turning point, is to move the stop loss towards my positions. So you can try the strategy. You can maybe backtest, or you can try on the live market. Seems like this week the markets are active. I see some breakouts like Euro JPY or some other pairs, but you can try and see how it plays out. So anyways, the very first thing you have to study is the price action. And if you wanna use Ichimoku Kinko Hyo like I do, then you better study the basics, the correct understanding of Ichimoku first. And then on top of that, you look for the right trending markets. And then on top of that, there is entry strategy and the risk management strategy, stop loss management, including, and psychology management as well. So yeah, that's really important. So yeah, let me check some comments now. Thank you very much for joining today. Today I covered pound JPY, since it has been supported by the ascending trend line on the daily time frame, and my view is bullish. And I just talked about the importance and the strategy of the risk management on my trades. Okay, hello CSM, good to see you. Jose, thank you for joining as well. And Anne, good to see you too. Thank you. And Hinata, good to see you also. Thank you for joining from Philippines. All right, TradeWiz, good to see you. And Spring Star, good to see you too. Thank you for joining as well. Spring Star says, Sensei, if we put stop loss on the strong key level, wouldn't there be a chance that the price would reverse our stop loss? No, it won't. Because remember, you are in the trending market. So the chances are the price bounces and price moves up on the N waves, bullish N waves. So the chance for the price to retrace to the previous key level is lower. But when it's ranging market, then yes, the chances are 50-50. Yes. Okay, hello again, good to see you. Thank you very much for joining. Okay, he says, can we enter the entry, then market when price below Kumo and the fair distance Tenkan-sen and Kijun-sen and the thin Kumo? I don't recommend you to trade when the Kumo thin, because it's overbought, oversold, so it's risky to trade in that case. You better look for the thicker and stable trending markets. Okay, Lil says, are you funded trader or own capital trader? I am own capital trader. I never get funded before. Yeah, simply because FTMO was not really popular in Japan when I was there, like 10 years ago. And yeah, and also I saw some rumors, like negative reviews about the funding challenges, and that's why when I started, I saved up my own money and started trade with my own money. Yes. Konja says, hi Kay, please, how do you identify big players, big banks, liquidity that the market might be hunting for? I simply check the Ichimoku 5 lines, especially Tenkan-sen, Kijun-sen, sometimes match with those key levels or liquidity levels. So that's how I check. And also when you see the long Senko span B as well, it can also act as the liquidity point. Yes. Okay, Little says, what many monthly profit target percent is? My monthly target is 10% in average. So I don't aim for 10% every single month, but in yearly basis, in average, if I can achieve 10% every month, that's more than great, and that's my goal with my trade and follow strategy. Okay, Doan says, hello Mr. K, when I back tested a pair with Forex tester with your strategy and I only found like 3-4 entry in a year, is it normal? No, it's not normal. It's not normal. You should be able to find more entry opportunities. Yes. Yeah, in a year, I think you can find at least 100 trades with my strategy KTS. Okay, hello Tomato and Kedir, good to see you from Ethiopia. Thank you for joining as well. All right, Golden Vo, good to see you. Thank you for joining. All right, good to see you. Okay, you're welcome. Noodle Master says, this week market was very volatile. I didn't get a chance to take trade. It's okay. It's okay. Whenever you can, you just trade. Never force yourself to trade. Whenever you are there, when the market's trending, that's when you trade. And even if you miss opportunities, or even if you haven't traded yet this week, it's okay still. It's okay, because markets are moving anyways. Tomorrow we may see more trends, or next week we may see more stable trends than this week, right? So yeah, it's okay. So yeah, that was my point today about pound JPY. Now it's ranging. So yeah, I just wanted to demonstrate the idea of and importance of the risk management today quickly. And again, pound JPY daily time frame, as I mentioned, it has been supported beautifully by the ascending trend line, by the ascending trend line as well as the Kijun-sen many times. So this is one of the strong indication that it's bullish. And I think the price reaches 200 eventually. That's my target for now. So yeah, thank you very much everyone. Today was a bit shorter live stream, but thank you very much. And after this, for those who are KTS Academy and the GTS members, I will be doing another live analysis. And since Euro JPY is trending, I may be entering the trade together. So I will see you there soon. So thank you very much for joining today. And I hope to see you again soon. Until then, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you so much.